Are you tired of living with a fear of future regret and uncertainty? Andy Schectman has a game-changing strategy that will give you 1000% certainty. As the President Miles Franklin Ltd, he is an expert in precious metals investing in domestic and international storage. He has also years of experience in the precious metals industry and is here to guide us on how to make smart investments in silver and gold. With market volatility at an all-time high, it's crucial to take action now before it's too late. In this video, Andy will share his expert advice on what steps you need to take for 1000% certainty. He reveals why buying and stacking silver and gold right now is the key to securing your financial future. Let's dive right in. It all began with his father, who provided him with invaluable financial wisdom. His father's advice was simple but profound: buy gold or silver every 2 weeks. This foundational principle became the cornerstone of Andy's financial strategy. Starting his journey at the age of 20, he made a remarkable commitment to purchase gold or silver regularly. Every 2 weeks, he has unwaveringly adhered to his practice for an impressive 33 years. This commitment speaks to the long-term perspective that shapes Andy Schectman's views on precious metals. What truly sets Andy Schectman apart is his perspective on the precious metals. He doesn't view them merely as investments, he sees them as a form of wealth preservation. In his eyes, gold and silver transcend the typical investment assets that people chase for short-term gains. Instead, he regards these metals as a fundamental store of value. Schectman's unique perspective on precious metals places a strong emphasis on the long term. Unlike many who are captivated by the allure of quick profits, he champions a patient and enduring approach. He encourages investors to look beyond the volatility of short-term market fluctuations and consider the historical resilience of precious metals. By contrasting this long-term approach with the often frenetic pursuit of immediate returns, Schectman invites us to appreciate the lasting value that gold and silver can offer in a world of economic uncertainty. The recent surge in central banks' gold acquisitions holds immense significance in the world of precious metals. Central banks are not your average investors. They're highly sophisticated players in the global financial landscape. These institutions are responsible for shaping the economies for entire nations and often the world. They have the power to influence currencies, interest rates, and ultimately the stability of the global financial system. Central banks' actions are manifesting in the draining of gold and silver from various exchanges. These situations are strategically acquiring physical precious metals, and this is evident in the record deliveries observed on exchanges like COMEX, LBMA, ETFs, and the Shanghai Metals Exchange. Take COMEX, for example, where enormous volumes of silver contracts are open, representing staggering amounts of paper, silver. However, there's a stark contrast when you look at the actual physical silver available for delivery. Central banks' unprecedented gold acquisitions are an encouraging sign for those investing in precious metals. It's important to recognize that these acquisitions are not random. They are the result of careful consideration by some of the most influential financial institutions in the world. Central banks are not just buying gold and silver, they're also diversifying away from the US dollar and the other fiat currencies. Their actions are indicative of a broader trend, and one suggests that a loss of confidence in the traditional fiat system and a move towards assets with intrinsic value. For patient and resilient precious metals investors, this represents more than enough indication that great things may be on the horizon. Price manipulation and suppression are significant challenges within the precious metals market that Andy Schectman addresses in his insights. One of the most pressing issues is the manipulation conducted by commercial banks and exchanges. These entities have been implicated in large-scale efforts to suppress the prices of precious metals, particularly gold and silver. It's essential to understand the concept of rehypothecation. This practice permits financial institutions to employ the same assets as collateral for multiple loans or transactions. In the context of precious metals, rehypothecation means that the quantity of paper gold or silver in circulation far exceeds the available physical metal for delivery. Control of precious metal prices often relies on the use of derivatives, such as future contracts. These financial instruments enable participants, including commercial banks, to trade substantial quantities of precious metals without actually possessing the physical assets. This leverage can be employed to manipulate prices by executing large orders in the future market, generating sudden price swings that impact investors' sentiment and trigger reactions from retail investors. As Andy Schectman emphasizes, this effectively transforms the market into a casino, where the most significant players can manipulate prices to their advantage. When it comes to making informed decisions about investment, it's crucial to emphasize the significance of fundamentals over short-term price movements. In the context of precious metals like gold and silver, focusing solely on day-to-day price fluctuations can be misleading. Instead, Andy Schectman advises investors to look deeper into the fundamentals that shape the market's long-term trajectory. These fundamentals include factors like economic trends, geopolitical developments, and the role of precious metals as a store of enduring value. Andy Schectman's advice to investors is straightforward: conduct thorough research. Before diving into any investment, it's essential to understand the underlying forces at play. Precious metals are not immune to the influence of broader economic, political, and financial dynamics. One of the key insights from Schectman's perspective is the notion that focusing solely on price can be deceptive. Short-term price movements are often driven by speculative trading and market manipulations. This can create volatility that distracts from the bigger picture. Rather than getting caught up in the daily price swings, Andy Schectman encourages investors to keep their eyes on the broader fundamentals. The potential role of gold in pegging to a new monetary system has gained significant attention in recent years. Amidst the challenges posed by the fluctuating fiat currencies and economic uncertainties, many experts, including Andy Schectman, suggest that gold could play a central role in establishing a more stable and reliable global monetary system. The idea revolves around the concept of returning to a gold standard or introducing gold-backed currencies, where the value of a currency is directly tied to a specific amount of gold. The International Monetary Fund has historically held a cautious view of gold as a reserve asset, but there has been a notable shift in its perspective. The IMF's recognition of gold's value as a reserve asset underscores the growing importance of gold in the global monetary system. This change in stance carries significant weight as the IMF plays a crucial role in international finance and policymaking. The emergence of central bank digital currencies is reshaping the landscape of global finance. While CBDCs offer potential benefits in terms of efficiency and digitalization, they often lack backing by physical assets like gold. This raises concerns about the stability of these digital currencies, particularly in times of economic turmoil and currency devaluation. The BRICS alliance, consisting of Brazil, Russia, India, China, and South Africa, is a formidable coalition of major emerging economies that has garnered increasing attention in the global geopolitical landscape. These nations, collectively referred to as BRICS, have come together to enhance their economic, political, and strategic cooperation. In a noteworthy development, the BRICS alliance has recently accepted Saudi Arabia as one of its new members. This decision has profound implications for the alliance's future and its ability to challenge the existing global order. Saudi Arabia's inclusion adds a crucial Middle Eastern player to the mix. The acceptance of Saudi Arabia into the BRICS alliance carries immense significance, primarily because of its potential to challenge the dollar hegemony. The United States has maintained its superpower status in large part due to dominance of the US dollar as the world's primary reserve currency. However, with Saudi Arabia, the world's largest oil exporter, joining the BRICS, there is an opportunity to challenge this dollar-centric system. Saudi Arabia's involvement could pave the way for a more diverse challenge of global monetary landscape and a shift away from the dollar's dominance. If you enjoyed this video, guys, make sure to subscribe to the channel, like the video, and watch this one as well.